Hello everyone, I am Ranjitha B.R. Today I am going to present a topic on Introduction to Financial Accounting for the BBM course. In this video I am going to discuss about Introduction to the Financial Accounting, meaning and definitions of bookkeeping, meaning and definitions of accounting and accountancy, features of accounting, objectives of accounting, and basic terms used in accounting. So let me move on to the introduction. Accounting is an ancient art in nature. It is as old as money. It is closely related with the human civilization and started with the money system. The system has gradually developed over several centuries. The accounting system in India was practiced in the ancient period by the ex-rulers Kautilya, the minister of the Chandragupta Maurya, mentioned accounting and auditing system in his books Arthashastra in the 4th century. However, the actual development of accounting began only in the 15th century. The credit for the development of modern accounting goes to the Luca Pacioli, a monk in Venice, in Italy. He is known as father of modern accounting. In the year 1494, he wrote a book on mathematics, popularly known as Summa, and he wrote about bookkeeping in that book. So now we'll try to understand the meaning of bookkeeping. Bookkeeping is simply a recording the business transaction in books and ledger, or it is the system of keeping the books of accounts for the purpose of recording the day-to-day financial activities of the business. Then what do you mean by accounting? As per the American Institute of Certified Public Accountants, accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events which are, in part at least, of a financial character and interpreting the results thereof. It means accounting is an art of what? It's of recording the transaction as well as classifying those transactions and summarizing them in a significant manner. In terms of money, the transaction should be in terms of money, and interpreting the results, understanding the results and communicating the results to the final audience. It is what the meaning of accounting. Or another meaning, accounting is a set of works involving identifying, measuring, recording, classifying, summarizing, analyzing, interpreting, and communicating the results of the business activities and financial position of the concern. Then, what is the meaning of accountancy? Accountancy is the theory and practice of the accounting. What the accounting says, it is what, and we have to practice that, the accounting theories are principles and procedures to be followed by business concern while recording and performing the transaction of business is accountancy. So accountancy involves principles as well as procedure to be followed by the business concern while recording and performing the business transactions. What the accounting tells, it is practiced in accountancy. So now it is the feature of accounting. Identifying. Accounting involves identifying the transaction to be recorded in the books of account. Second one, measuring. The business transaction, what we record in books, should be expressed in terms of money value. Then recording. Accounting involves recording the business transaction in the books of original entry. We have to record those business transactions. Next one, classifying. Classification of the entries in the journal or subsidiary books into appropriate accounts in the ledger. Summarizing. The preparation and the presentation of financial statements have to be summarized in a mannerism. Then analysis and interpretation, rearrangement of information and drawing meaningful conclusion about financial position. Next, last one, communicating. Communicating the interpreted results to the end users for decision making. These are all the features of accounting. Then, what is the objectives of accountancy? It is to keep a systematic record, then ascertain the results of the operation. It may be profit, it may be a loss, but we have to ascertain the result of the business transactions. Then to ascertain financial position of the business and to facilitate rational decision making in the business. And we have to satisfy the requirements of law and usefulness in many respects. We have to observe the law standards and we have to ensure effective control over the performance of the business. For all these objectives, we have to go for the accountancy. We have to maintain the accounting. Then, what are all the basic terms used in accounting? We should know the terms what we use in accounting. So, first and foremost term is entity. A thing. Entity means a thing that has a definite individual existence. Then what is a business entity? Business entity means a specifically identifiable business enterprises. Then what is a business transaction? Transaction means an event, activity or deal involving the exchange of money or money's worth between the person. Some event should be taken place between two persons, exchange of money or money's worth. The transaction between a business concern and its owner or an outsider involving money or money's worth. The transaction may be cash transaction or credit transaction. Then what do you mean by cash transaction? Cash transaction is a type of business transaction where cash is paid or received immediately. The movement of cash from one person to another person taken up instantly. Then it is called cash transaction. Credit transaction means which create an obligation to pay or receive the money in the future date. Then what is the capital owner's equity? The amount of money or money's worth invested by the owner in the business. That is owner's equity or capital. It is the money invested by the owner of the business. So capital equals assets minus liability. Next one, drawings. Cash, goods or any other assets withdrawn by the proprietor from his business for his personal purpose. If any cash or goods or any other assets taken back by the proprietor is called as drawings. Goods, commodities or things meant for resale, not for consumption. It is meant for resale. Then assets, resources of the enterprises used by the business for its operations. It may be fixed assets or it may be current assets. Fixed assets means Assets held on a long-term basis like land, building, machinery, furniture, etc. Current assets means it is the asset held on short-term basis such as debtors, cash, stock, etc. Liability. Claims of the outsider against a business concern which bind the business concern to others such as loan borrowed, overdraft, deposit accepted. Debtor. A debtor is a person who owes money to the business. Creditor. A creditor is a person to whom the business owes money. Purchases. Goods purchased by the business for the production or sale. It may be a cash purchase or it may be a credit purchase. It is recorded in purchases account. Sales. Goods sold by the business. It may be cash sale or credit sale. It is recorded in sales account. So these are all the basic terms what we use in accounting. Thank you, one and all.